What's up, you guys? Welcome back to the channel. For those of you who are new, my name is Evan and I make videos about hot stocks, dividends, and options. So if that interests you guys, make sure you subscribe and hit the notification bell so you never miss when I upload. Now in today's video, we're going to go over why NIO is up today, when they could possibly 2 or 3x their share price, and I also might touch on why NIO is still a good buy towards the end of the video. But before we actually jump into it, if you guys wouldn't mind going down and hitting the like button, I would really appreciate it, and it really does help out the channel, and it lets me know that you guys enjoy these videos every day. So again, if you guys wouldn't mind hitting the like button, I would really appreciate it. But with that out of the way, to kind of give you guys some context, today NIO is up right around 4%. And they're trading right around $42 to $43. And from the looks of it, it seems like they're kind of consolidating around this $42.50 area, at least as of the last hour or two. On the 1 week, NIO is down almost 10% at 9.5% in the red. And you can see that most of the week they've been red, and it's been a constant downwards trend for the majority of the past week. And just today has been pretty much the only green day. And at least in my opinion, this isn't too surprising because there's been a lot of negative news in the EV space for a lot of these EV companies over in China. Because looking at the 1 month chart, with NIO being down right around 3%, you can see more exaggerated on how NIO has been going down, and they've had a constant downtrend pretty much for the last few weeks now. And there hasn't been too many green days for NIO or these other Chinese EV stocks. But to back up all the way to the beginning of all this red that we've been seeing the last few weeks, a lot of it was due in part to investors worrying that Chinese stocks were going to be delisted from American exchanges. So that kind of started this downward trend for these EV stocks, especially NIO, XPeng, and Li Auto. And then because they already had momentum going downwards, there was also negative news coming out for Li Auto, XPeng, and Candy. And it started with both XPeng and Li Auto being shorted. And there was actually a rating downgrade for XPeng, and they went from a buy to a neutral. And so that really affected all these smaller EV stocks because they all kind of travel as one and they kind of have a very similar trend line. But then after this news about all these companies being shorted by these big research firms, we saw these companies start selling shares to raise capital. And it started with XPeng and Li Auto, and then Tesla jumped in as well. And for the most part, when a company sells shares, their share price drops because there's more shares available to the public. So realistically, each share is worth a slight bit less than it was depending on how many shares were added to their offering. And so that's a big thing that pushed NIO down the last week or two. And then because these other companies were raising capital by selling shares, NIO had to jump in as well to kind of keep up with the trend. And there's also people saying that NIO is raising this capital so that they can hit their expectations for NIO Day, which is in about a month or so. But one of the big reasons why NIO is trading higher today is because of this stock offering that they did. And if you guys don't know, they actually sold around 60 million shares at $39 a share. And this basically allowed NIO to raise about $2.8 billion in capital. And although they weren't short on cash, this definitely gives them an advantage, especially if the economy tumbles again, because they won't be able to last through another economic crash like we already had. So NIO likely raised this capital for a few reasons. First being that they want to hit their expectations for NIO Day, which is kind of just an assumption at this point. But also they're raising money in case there is another economic downtrend. And also because of all the hype around EVs right now, they're just taking advantage of all this investor interest in EV stocks. But because NIO shares fell yesterday in regards to the stock dilution that happened where NIO sold around 60 million shares, today is kind of a bounce back from that. And there was also some new price forecasts put out for NIO, which also did help bump up their price. But a lot of these NIO investors are seeing the bigger picture, and they're not so worried about their stocks being worth a slight bit less because they know long term, with this capital raised from selling these shares, NIO is going to use that cash to their advantage to really ramp up production and improve their overall business model. So sure, even though shares might take a slight hit right now, in the long term, they're going to be worth way more than they could have been had NIO not raised this capital. But like I mentioned about that price upgrade for NIO, there was an analyst, Kelvin Lau, who initiated coverage of NIO on Monday with a buy rating and a price target of $59. And he thinks NIO is the distinguished pick among the emerging set of upscale electric vehicle makers in China. And he also sees NIO becoming profitable by 2023, with sales of around 140,000 vehicles. Now to compare that to NIO currently, they're on track to sell roughly 43,000 vehicles in 2020. And this is up over 20,500 vehicles when you compare that to 2019. And we also know that NIO wants to deliver between 100 and 150,000 vehicles in 2021. Now, whether that's going to happen for sure, it's hard to say, but I think definitely by the year 2023, 140,000 vehicles is a very conservative estimate on what they're going to be delivering. But also regarding Deutsche Bank, if you guys remember Edison Yu, he also had positive things to say about NIO yesterday, and he said in September that he thinks NIO is the leader of the group, and this is in regards to the EV stocks over in China, and he said that NIO could become China's next iconic auto brand. And he also thinks there's plenty of room for all these EV companies to be winners over in China. Because if you just look at how big the Chinese market is and how many available customers there are to all these EV companies, it's not really one over the others, because you can have all these EV companies that are winners and that do really good numbers in revenue and deliveries. It doesn't have to be just one like just Tesla. It can be Tesla among others as well. But now to give you guys some of the numbers and an estimate of when NIO could potentially double their current share price. And it's likely not as far out as you guys are expecting. I know a lot of you guys probably have a pretty conservative estimate on when NIO is going to double or triple their share price. And I think that's a good mindset to have when you're looking at a share price of a growth stock like NIO, because you don't want to estimate that they're going to 5 or 10x in the next couple of years and then be let down and not have nearly the gains you were hoping for. But as of right now, NIO is up almost 19 times in the past year. And this is pretty incredible because if you actually look at the fact that they were almost bankrupt at the beginning of the year, even in the past 6 months, NIO is up 558% over that span. And even though they've been flat and been trending down the past month, this is just something short term that's affecting NIO. I would assume most of you guys who are already invested in NIO, you're probably planning to hold them for quite a few years into the future. And so a red month like this is probably just a time to add more shares to your portfolio. But to give you guys some context before I kind of give you an estimate of when I think NIO could double or triple their share price, starting on November 17th, we know that NIO reported very good earnings. And in addition to this, NIO's deliveries for November came out on December 1st. And they delivered 5,291 vehicles. Now this was obviously up from the previous year, and they were up 109.3% year over year, and this was also up 4.66% over the prior month for their deliveries in October. And when you actually look at this over an extended period of time, this implies an annual growth rate of 72.9% on a compound monthly basis. Now, obviously, as a company increases in value and they get bigger and increase in deliveries, they're not going to continue at these crazy high growth rates forever, but they could realistically do it for the coming years, and they could continue skyrocketing in deliveries. But year to date, NIO has delivered 36,700 electric vehicles, which is up 111.1%. And NIO has also had an increase in order growth in the last few months. And because of this, NIO said they're in the process of accelerating the production capacity expansion in December of 2020. And this is obviously to accommodate for the increase in order growth that they've been having. But now using some of the numbers that NIO has reported, if we take their $667 million in revenue and divide it by their 12,206 vehicles that they delivered last quarter, that's an average selling price of over $54,000 per vehicle. Now, if we take this and we assume that their average selling price is going to increase by 1% per quarter, which is really not too crazy to assume, looking at the fact that NIO is increasing their overall company month after month and quarter after quarter, so a 1% increase of their average sale price is not too crazy to expect. And now if we look at their numbers for quarter 4 of what they've delivered so far, and what is kind of expected by the end of December, we can assume that NIO is probably going to deliver almost 16,000 vehicles in quarter 4 of 2020. And that would bring their total up to over 42,000 in 2020 with a total revenue of $2.2 billion. And so if we use these numbers going into 2021 and we expect an average delivery growth of 10% per month, now that could be a bit high, but we're just going to use that as a flat number to kind of predict where NIO could be in 2021 or 2022. Now this works out to about a 33% growth quarter over quarter. And then if we also assume that their average sale price is going to increase 0.5% quarterly, This brings NIO's deliveries up to over 130,000 in 2021. And then on top of that, their revenue would be $7.3 billion in 2021. Now, just looking at these numbers, it can seem very extreme, but given the fact that NIO has already mentioned that they want to deliver at least 100,000 vehicles in 2021, to expect them to hit 130,000, while it could be a bit of a stretch, I think it's very realistic for NIO, considering the fact that they just raised almost $3 billion, and they're going to use that money to put into technologies and creating more facilities, on top of leveraging their partnership with JAC Motors, who they already have produced their vehicles. And so to kind of give you some reference of where this would put NIO, if their revenue was $7.3 billion next year, that would be about 24% of Tesla's estimated revenue as of this year. And so because of this, NIO's market cap in 1 year should be about 24 to 25% of Tesla's right now. That's given the fact that they would deliver 130,000 vehicles in 2021. And so if we take about 25% of Tesla's current market cap right now of $573 billion, that puts NIO right around $143.25 billion. Now again, this is taking things kind of to the extreme, but I think it's something that could realistically happen. And this is taking into assumption that NIO doesn't raise any more capital by selling any more shares, and not taking into account profitability differences. NIO would be worth almost 2.4 times their current price if their market cap was to increase to $143 billion at some point in 2021. So this would imply that NIO would hit $100 over the next year in terms of their share price, where right now they're trading right around $42 and $43. And so that is a very drastic increase in just 1 year. And that's not a very conservative estimate to say that they would jump up to $100 next year. But I also wouldn't put it past NIO, given these numbers and given what some analysts predict NIO is going to do next year in terms of deliveries, and where they're going to be at in accordance to Tesla. Because if they are around that 24 to 25% market cap of Tesla as of this year, that would put them around that $100 share price next year. Now, for those of you who made it this far into the video, I want to hear what you guys think down in the comments, and what you guys think NIO is going to hit by the end of 2021 in terms of their share price. Lastly, if you guys haven't signed up for Webull, make sure you guys sign up using the link in the description. When you sign up and deposit $100, you'll get 4 free stocks. Also, if you guys enjoyed the video, make sure you leave a like because it really does help out the channel. And with that said, thank you guys so much for watching, and I'll see you back here in the next one. Bye.